So guys, in this video I'm going to show you many trading examples of real swing trades which I took and which I published in my members area. I know it's very important to show you a lot of examples for you to learn this trading method and feel comfortable trading it. So what I'm going to do is that I'm going to show you all the swing trades which I took since 2018. I'm going to cover it one by one and I'm going to comment on every one of them. So let's get to it. Let's start with New Zealand dollar, US dollar. That was the first trade in 2018. This is a New Zealand dollar, US dollar daily chart. And the trade which I had there was based on a rejection setup. There was this strong rejection of higher prices. So I used the profile over this rejection period, over this period. And as you can see, there was a significant volume cluster. Let me zoom it a bit. Significant volume cluster in here. So what I did is that I draw the line there. This was the level to go short from. My stop loss was in here at the top of this swing point. And I took the trade with risk reward ratio 1, which means that the take profit was in here, this line. So I waited for this level to be hit for around 4 months. And the price hit the level in here. And what happened was that first the price went against the level and hit the stop loss in here. But as I said in a previous video, I take all my swing trades with the alternative stop loss method. So I did not close the trade there and I held it because the daily candle did not close past my stop loss, right? So I held the trade and I took the profit in here. All right, so that was the take profit. And if I were looking for take profit using the volume profile, using the volume-based take profit, I would have done this. I would have stretched the volume profile over this trend area, over the pullback area, and there is a significant volume cluster in here. And I would quit the position a little bit before that. So it would be in here, right there. There would be the take profit, volume based. As you can see, it would be a little bit better than the take profit, which I actually took in here. All right, so that was the first trade. Now the next trade was on the Swiss franc Japanese yen. It was based on this volume accumulation setup. As you can see, heavy volumes followed by a strong selling activity. So I placed my short level in here and I was waiting quite long for the level to get hit. As you can see, it was around half a year before the price hit the level in here. And I placed the stop loss at this swing point. Unfortunately, this one ended up as a losing trade. The price turned, but it turned later. There was nice sell-off, but it came a little bit later. Now, if I used stop loss at this swing point, at this one, this is a definitely stronger swing point, then the level would hold. The price would not reach the stop loss, but this stop loss would be just too wide. So that's why I decided to use this swing point for the stop loss. And I took a losing trade there. That's also part of the business. Important thing is that you take more winning trades than your losing trades. Now the next swing trade which I took was on the Australian dollar Swiss franc. This is Australian dollar Swiss franc daily chart. As you can see, there was a volume accumulation setup in here. Heavy volumes followed by a strong buying activity. So heaviest volumes were in here. This was my long level. As you can see also in this case, it took quite a long time for the price to make the pullback to this level again. It was 1, 2, 3, 4, 5, 6, 7 months until the price got there. But it doesn't matter. I was still willing to enter the trade. So in here there was the pullback and the reaction was actually a pretty quick one. It was right there. The stop loss which I used was in here at the swing low, at this swing low. and I took it with risk reward ratio 1, which means that take profit was in here. Now, as you can notice, the take profit in here was actually a pretty good place to take a profit, because there was a rejection of lower prices in here, meaning that this was a strong support, and when the price went past the support, then this level became a resistance. So that's why it was best to quit the trade right here at the resistance, because as you can see, it reacted very nicely to it, and then it turned downwards. Alright, so this was a very good place to quit the long trade. Now the next swing level which I took was on the Swiss franc Japanese yen. Again, this is a daily chart, and in here there was a uptrend right there, strong buying activity. So I was looking for significant volume clusters there. If you look at the flexible profile, there was a significant volume cluster right there, which got accumulated within this little rotation, which took place within the uptrend. Also, the price reacted to this general area in the past, meaning that it was a strong resistance, and when the price made it past the level, it became a support. So that was a nice confirmation of the level. The stop loss which I used was below this swing point. This was the long level based on the heaviest volumes right there, so I went long from there. And the take profit for this trade was with risk reward ratio 1, so it was in this area. So as you can see, the price reacted very quickly to the level. The reaction was not that big because the trend turned, but it was big enough for me to take a profit. Now let's go into the Australian dollar, US dollar daily chart. There was another trade there. There was a strong uptrend, so I was looking for significant volume clusters. There was a one pretty significant in here, and my long level was right there at the place where the volumes were the heaviest, right there. This is the place. The stop loss was pretty tight. It was below this swing low, so this was the stop loss, and I was trading with risk reward ratio 1, so my take profit was also pretty tight right there. And if you look at the reaction, you can see that I was able to take the full profit within just 1 day. Now the next swing trade was on the New Zealand dollar, US dollar. This is a daily chart, and there was also a very similar development. There was an uptrend. So I was looking for significant volume clusters for the trend setup. In here there was a significant volume cluster. Heavy volumes created within this sideways price action area, within this 4 days rotation. This was the level to go long from, based on this volume peak right there, heaviest volumes of the volume cluster. Stop loss was below this swing point, and I was trading with risk reward ratio 1, so this was the take profit. As you can see, the reaction was pretty nice one. I was able to take a full profit within just 1 day. Now, if I were trading using the volume-based take profit, then I would have used the volume profile like this. And in here, this is a heavy volume cluster, so this would be my take profit right there, a little bit below it. So I guess somewhere in here. So this would be the take profit based on volumes, all right? It would be much bigger than the one which I took. Now also pretty similar scenario was on the other trade which I took. It was a swing trade on euro dollar. This is a daily chart. There was a strong uptrend, so I was looking for longs, and I used the flexible profile like this over the trend area. Now, as you can see, there was a significant volume cluster right there with heaviest volumes in here. So this was my long level, and the stop loss was below this swing point. So this was the stop loss somewhere in this area was the take profit. So this was the reaction, another nice winner which I took. Now, as you can see, the reaction was much bigger than what I took with take profit based on the volumes. It would be somewhere in here, heaviest volumes right there. So I guess that even in here I would be careful. I would probably quit the trade right there, or the latest in here, which would be very nice movement like this, right? Especially with stop loss in here, then this would be like risk reward ratio 2, which is kind of nice. Now let's go into another trade. This one was on the Canadian dollar Japanese yen. This is a daily chart. There was a strong buying activity, so I used the flexible profile over this area, over the trend area, to identify significant volume clusters. There was one in here, the most significant one. And I looked into this area, into the volume cluster area, like this. I was interested mostly in those candles and in volumes in them. And the heaviest volumes were right there, so this was my long level. The stop loss for this trade was below this swing point. So it was in here, this was the stop loss line, this was the trade entry, this was the take profit which I wanted to take. Now it took like 8 months for the price to make it back to the level again. As you can see, the reaction was not there. The price just made a little rotation around the level, then it went into another selling activity. Now what I did is that I did not close the trade when it hit my stop loss, but I closed it when the daily candle closed below my stop loss level. So again, in this case, I used the alternative stop loss approach. This was my stop loss level. And in here, the price closed a little bit before the level. So this is where I actually quit the trade right there. Few pips below the normal stop loss level. Now, another swing trade which I took was on the Australian dollar, Canadian dollar. This one was based on this rejection of higher prices, aggressive rejection, and heavy volumes were accumulated in here. So my short level was right there, and the stop loss was at this swing high, at this swing point, which was in here. Right there, there was a profit target which I wanted to take. Unfortunately, my stop loss was not too wide. It was very aggressive, I would say. It was pretty aggressive entry with small stop loss. As you can see, the reaction was there. There was a crazy strong sell-off, but because of the tight stop loss, I just got stopped out before the sell-off started. I was not really happy about that, but sometimes this just happens. So instead of taking very nice and profitable short, I only took a loser there. But as I said, things like that happen. It's just part of this trading business. Now the next swing trade was on Australian dollar Japanese yen. This is a daily chart. There was a strong selling activity, so I was looking for the trend setup. I was looking into this trend for significant volume clusters. Now there was volume cluster in here, this one and this one. Now the first one, this one, seemed to me that it got tested with this little pullback. So I was not really into taking it. So I took the lower one, this one. So this was my short entry level. Stop loss was above this swing point right there. So this was the stop loss. And this was my take profit. I was trading with risk reward ratio 1. Now, if I were trading with volume-based take profit, what I would have done, I would have used the flexible volume profile over the pullback area like this. And this is a significant volume cluster right there. So this would be take profit based on volumes. All right, at that place, a little bit below my original take profit. By the way, there was also very nice confirmation of the level. It was the ABCD confirmation. Let me show you. This was the A point, this was the B point, this one was the C point. Let me show you. A, B, C, and in here, almost exactly at the level, was the D point, indicating to go short from there. So with the confirmation, this one was a very nice trade to take. The next swing trade was on the Australian dollar Swiss franc. It was based on the rejection setup. It was based on this aggressive rejection of higher prices. As you can see, within this rejection, there were two places with significant volumes, in here and also in here. I did not want to take short from this level because it was too close to the high. I don't really like trading like that, so I took the lower one. As you can see, the reaction was pretty precise. The price just hit the level and made a very nice reaction. The stop loss for this trade was in here at this swing point, and the take profit was somewhere in this area. It was with risk reward ratio 1, so there was the take profit. Now with volume based take profit, I would have looked into this pullback area like this. In here there was a significant volume cluster, so this would be ideal take profit for this short trade. Alright, ideal volume based take profit. As you can see, the price actually reacted to it very nicely and turned and went into buying activity. So this would be a very nice place to quit the trade. Now another swing trade which I took was also on the Australian dollar Swiss franc. It was based on this downtrend. It was based on this volume cluster which got accumulated within the downtrend, and the level was right there at the place where the volume peak was the heaviest. Stop loss for this trade was in here at the swing point, at this swing point right there. So this was the stop loss level, and the take profit was in here, somewhere in here. So I was able to take the full profit within just 1 day. The reaction was pretty spot on, which was pretty cool. If I was using the volume based take profit, then there would actually be two areas where I could have taken the profit, either in here at this volume peak or in here, right? At those two places. The next swing trade was on the Australian dollar Japanese yen. Again, this is a daily chart. This one was based on this rejection of higher prices. I used the flexible volume profile over this period, over the rejection period. There was a very nicely visible volume cluster in here, meaning that the sellers who rejected the higher prices were adding to their selling positions massively in here. So this was my level to go short from. The stop loss which I used for this trade was at this swing point. This is the swing point right there. This was the stop loss, and the profit target was somewhere in this area. So I was able to reach it in a couple of days right there. If I were using the volume based take profit, then let me show you where the take profit would be. It would either be in here or in here, or the latest, for example, if I used two take profits for first half and second half of the position, then the second take profit, the latest one, would be in here at this volume peak. All right. Now let's go into the next trade. This one was on New Zealand dollar, Canadian dollar. It was based on the trend setup. As you can see, there was a strong buying activity, so I used the flexible volume profile over the trend area. There was a significant volume peak in here, right there. So the level was based on that, on the heaviest volumes. This was the entry point, this is where I went long. The stop loss for this trade was below this swing point, so it was in here. And with risk reward ratio 1, this was the take profit. By the way, there were also rejections of this level in the past, meaning that it was a strong support, and when the price went past it, it became a resistance. So it only made sense to quit the trade in here, because this level could work as a strong resistance, alright? So the safe approach was just to quit the trade in here, not to try and trail the trade higher, alright? It was safest to quit the trade right there. So another trade was on the US dollar Swiss franc, and there was a strong downtrend in here, in this area, and there was a significant volume cluster in here with heaviest volumes right there. I hope you can see it. So this was the short level. This is where I went short. The stop loss for this trade was a pretty tight one. It was at this swing high right there, this swing high, and I took it with risk reward ratio 1. So take profit was somewhere in this area. So as you can see, the price touched the level, reacted pretty quickly, and the next day I took a profit from this trade. Now, if I wanted to take profit based on the volumes, then I would look at the profile, and heaviest volumes were actually in here, right there. This volume peak exactly at the level where I took the profit. So it would have been the same, all right? Now, there was also another confirmation of the level. It was the ABCD confirmation. If you look in here, right there, this movement from point A to point B, then down to point C, which was exactly at 50% of this AB movement. So you move the Fibonacci tool like this to start in the point C, and this is the point D. All right, so A, B, C, D, short from D, short from there. So that was another confirmation of the level. Now the next trade was on the US dollar Japanese yen. There was a trend setup in here, strong selling activity, so I used the flexible volume profile over this selling activity to find this level. Right there, I went short. From there, this level was my stop loss level, right there at this swing point. As you can see, the price did not react to the level, so I took a losing trade. I did not quit the trade when the price hit this level. I quit it right there when the daily candle closed past the stop loss level in here, alright? So a few pips above the stop loss. Now another trade was on the US dollar Canadian dollar. There was an uptrend, so I used the trend setup. There was a heavy volume cluster within this uptrend. Also, what I liked about this level was that it was a resistance which became a support when the price went past this level. Unfortunately, there was no reaction to the level. The price went past it. My stop loss was in here at this swing point, and I quit the trade when this daily candle closed below the stop loss, so exactly in here. Alright, as you can see afterwards, the price rotated and turned into a strong buying activity, but unfortunately I was not longer in that trade, and I just took a stop loss in here. So as you can see, even the best looking trades like this one, nice trend setup combined with resistance becoming support setup, can also fail, but that's also part of trading, so you need to be aware of that. Now I must say that at this point I had sort of losing streak. There were 4 losing trades. I already had 2, and 2 more are to come. In here, this is the US dollar Swiss franc. There was the volume accumulation setup right there, rotation followed by strong sell-off. The heaviest volume peak within the rotation was in here, this was the level where I went short from. As you can see, the buyers were just too strong. They pushed the price through the level as if nothing happened. Also, there was this support becoming resistance setup. But this didn't help, even though the level was pretty strong, really nicely visible, and confirmed by the other setup. It did not work. The price just shot past it. So that was actually a third losing trade in a row which I took. And the next one was on the New Zealand dollar US dollar. So it looked like this. There was a strong buying activity, strong uptrend. So I was trading the trend setup. I used the flexible profile over the trend area. There was this nicely looking volume cluster in here. So this was the level to go long from. As you can see, the price rotated around the level, but in the end, sellers won and the price went downwards. The stop loss for this trade was at this swing low, so it was in here. I was trading with the alternative stop loss, so I did not quit the trade when the price hit the level, but I closed it at the catastrophic stop loss, which was somewhere in here. This is where I quit the level at the catastrophic stop loss. When the price hit it, I quit the trade. I had a hard stop loss in my trading platform at this trading level. Now that was the last trade of this losing period of 4 consecutive losing trades. The next one was a winner. It was on the Australian dollar, Canadian dollar. So this trade on the Australian dollar, Canadian dollar was based on a rejection setup. As you can see, there was a rejection of lower prices in here. The heaviest volumes within the rejection were right there. So let me draw a line there. So this was the entry point. This is where I entered a long. The stop loss was below this swing point, right there. This was the stop loss line. And I was trading with risk reward ratio 1, so the take profit was somewhere in here. Now, what happened was that the price did not really respect this level. There was a reaction, but not big enough. Price turned, hit the stop loss, but I was using the alternative stop loss. The price did not close past the standard stop loss, so I held the trade. I was patient, then I waited, and in here I took a full profit from this trade. So as you can see, the alternative stop loss saved the day in this case, and because of that I was able to take a full profit instead of a losing trade. Now let me show you how the volume-based take profit would look like. All right, volume-based take profit would be in here, exactly at the take profit which I was trading. All right, so there was a nice coincidence. Volume-based profit target was at the same level as risk-reward ratio-based profit target. Now let's have a look at the next trade. This one was on the Australian dollar US dollar. Again, this is the daily chart. This was pretty old level. It was based on heavy volumes which took place before this strong uptrend. Before this strong uptrend right there. Those were the heavy volumes created before that. Now I should probably use the profile like this. Over this whole area, over this whole volume accumulation before the strong buying activity. Now, as you can see, the volumes are the heaviest in here, so that was the long level, and it took almost a year before this level got hit. Still, it doesn't matter, markets have good memory, so I had a limit order there, and when the price hit that order, I went long. The stop loss for this trade was in here. It was at this swing point low right there. So this was the stop loss, and the profit target was somewhere in this area. I was trading with risk reward ratio 1, so I took the take profit in here. Now if I were using the volume based take profit, let me show you where the profit would be. I would have used the profile like this, and the take profit would be in here a little bit above the take profit which I took. Alright, it would be based on those heavy volumes, so it would be risky to try and go past them. As you can see, the price reacted to them not that strongly, but it would be risky to hold the trade past those heavy volumes. Alright, so the volume based take profit would be in here. Now the next swing trade was on the euro dollar. There was a buying activity, strong uptrend, so I was looking for significant volume clusters. And there was one in here, right there, this one. And what I also like about this level, and also the reason why I placed the level a little bit above the heaviest volume peak, which was in here, was that there was a reaction to the level in the past, meaning that it was a strong resistance. When the price went past it, the resistance became a support. So that's the reason why I took this higher level and not this lower one. Anyways, this was the level. The stop loss was in here. It was at this swing low. So this was the stop loss. As you can see, the price just missed the stop loss, reacted to the level and made a buying reaction. The take profit for this trade was somewhere in here. So right there, I took the take profit. Now, if I was trading and taking the take profits using the volume-based method, then it would be much better because I would have taken the take profit in here at this volume peak. So as you can see, I would have double the profit from this trade. All right, so that would be the volume-based take profit in this case. Very nice reaction to a pretty old level. And as you can see, even though there was a really strong selling activity on the euro, the price reacted to this swing level. There was basically the only pullback in this selling activity. It was a pretty cool trade. Now, there was also one more trade which I took on the euro. This one was not as successful as the previous one. This one was based on the volume accumulation setup. It was based on those massive volumes which got accumulated before the start of this buying activity. I think that this level was a pretty strong one, but even though the price did not react to it, sellers were just stronger. Price went past the level without any reaction. The stop loss for this trade was in here. I was trading using the alternative stop loss, so I did not quit the trade in here, but I did quit it when the daily candle closed below the stop loss line. So this is where I quit the trade manually. Now, the next trade was on the British pound, and this was a pretty funny trade. It was based on volume accumulation setup. It was based on heavy volumes which got accumulated before strong buying activity. Right there. The volumes were also very nicely visible on the yearly chart. The setup looked very nice. The price went against the level pretty aggressively. Then there was a rotation. I was in the trade already. I was in the long. The stop loss for this trade was below this swing point, so it was in here. And this was the take profit based on the risk-reward ratio 1. And in here, in this candle, this was a very significant macro news candle. And this news was concerning the rate decision. And as I already said, I quit my swing trade before release of such news. And I quit the trade somewhere in this area before the news got released. So I was able to quit with like 50% of the take profit. Then there was this huge volatility and the price almost hit the stop loss. So I did not really re-enter the trade. I wasn't really into re-entering the trade, which turned out to be a pretty good decision. As you can see, after the rotation, the price just went downwards again. So it was a pretty good decision to quit the trade before the news and take at least something from it in here. Now the next trade was a pretty cool one. It was on the Swiss franc Japanese yen. And I waited for this trade for so long. There was a rejection of lower prices in here, and within this rejection there was this significant volume peak. So at the heaviest volume peak I draw the level line, it was in here, and I waited a year for the price to make it back to this level again. As you can see, it paid off. My stop loss was in here, the take profit was in here. Reaction was pretty spot on, and I took my profit target in here, right there. If I was trading using the volume-based take profit, I would have used the profile like this. And this would be the place where I would have quit the trade at those heavy volumes. Also, you can notice that there was a rejection of this area in the past, also in here, meaning that it was a strong support in the past, and when the price went past it, it became a resistance. So this was definitely a good place to quit the trade, alright? Now when you look at it like this, you see that the price continued, right? But at that time, it would be extremely risky to try and hold the trade against this resistance, which was both based on the volumes and also on the support becoming resistance setup. Now the next trade which I had was on the US dollar Japanese yen. There was a really strong sell-off, so I used the flexible volume profile over the sell-off area. There was a significant volume cluster in here with heaviest volumes right there. So this was the short trade entry. My stop loss was in here at this swing point. This was the stop loss line. As you can see, the price was quite close to it, but then it turned and I took the take profit somewhere in here. So there was another nice winning trade from this level. And if I was using the volume-based take profit, then I would have used the flexible profile like this. I would have identified the heaviest volumes in here, this significant volume cluster. So this would be the take profit. It would be double the take profit which I took. So it would be kind of nice to hold the trade and quit it before it hit those heavy volumes and to have double profit. Now let's go into Australian dollar and New Zealand dollar. There was another swing trade which I published in my members area and which I also took. It's very nicely visible. It was based on the trend setup. It was based on this trend and on this volume cluster. This was the level to go long from, heaviest volumes right there. So that was a perfect spot to go long from. The stop loss for this trade was in here, and somewhere in this area was the take profit. As you can see, the price went past the level a bit. It hit the stop loss line, but I'm trading with alternative stop loss, so I held the trade. The trade did not close past the stop loss line, so I held it, and I was able to take a full profit the next day right here. Now, if I wanted to take a take profit based on a volume profile, then it would be in here. This would be the ideal take profit based on volumes. So in this case, the take profit would be bigger than the one which I took in here. Now the next trade which I took was on Australian dollar, Canadian dollar. It was based on this uptrend and on the trend setup. So I used the flexible volume profile like this. I identified heavy volume cluster in here. From the heavy volumes in this volume cluster, I went long from there. The stop loss for this trade was below this swing point, right there, below this swing point. So this was the stop loss. Take profit was somewhere in this area. So I took the profit in here. Now, if I was trading using the volume-based take profit, it would be the same. I would quit the trade in here at this little volume peak. This would be the best place to quit the trade. Now, also there was nice confirmation of this level. it was the ABCD confirmation. Right there at the top was the point A, this was the point B, this was A, this was B, then the price went upwards into point C, like this, from there to point D, exactly at our level. Alright, so that was a nice confirmation of this volume-based level. Now this next trade which I took was on the Australian dollar Japanese yen. It was based on heavy volumes which got accumulated in here in this rejection of higher prices. So I used the flexible volume profile over the rejection area like this. As you can see, the heaviest volumes were right there. So this was my level to go short from. The stop loss for this trade was in here at this swing point right there. And the take profit with risk reward ratio 1 was somewhere in here. So in a couple of days I was able to take a full profit when the price reached it right there. Now if I were using the volume based take profit, I would have used the profile like this. The heaviest volumes were right there. So a little bit before those heavy volumes got hit, it would be a nice place for a volume based take profit. The price reacted to those volumes very nicely, so this would really be the last best place to take your profit, to quit your trade before the price turned. Alright, in this area there's not really any clear place where to take the profit. So the next trade was on the Canadian dollar Japanese yen. It was based on volume accumulation setup which took place in here in this rotation, followed by strong selling activity. When the price made it back to this level again, I went short. Unfortunately, the price did not react to the level. My stop loss was in here. And when this daily candle closed past the stop loss, I quit the trade right there. This is where I quit the trade using the alternative stop loss approach. Alright, so this one was a losing trade. Alright, so the next one was on the euro dollar. Again, this is the daily chart. There was a rejection of higher prices in here. So I used the profile over this area. Heaviest volumes being right there at our level. This is where I went short. As you can see, this reaction was a pretty nice one, pretty spot on. The stop loss which I used was in here at the swing point, right there. And take profit was with risk reward ratio 1, so it was somewhere in this area. The next day I was able to take a full profit. Now if I were using the volume based take profit, I would have used the profile like this. And the take profit in this case would be right there. Alright, bigger than the first one. Now the next one was a pretty crazy trade. It was on the US dollar, Canadian dollar. There was a strong sell-off right there, so I used the profile over the selling activity. There was this nicely looking volume cluster and also this support becoming resistance setup. The level is not exactly at the heaviest volumes, but it's a little bit lower because of this reaction. After quite a long time, after many months, the price hit the level, went past it, and the stop loss was in here at the swing point. This was the stop loss area, this was the line which I marked in the chart. What happened is that the price did not close above this line, did not close above the standard stop loss, which meant that I did not close the trade because I'm trading the alternative stop loss method. So I did not close the trade, I held it, and the take profit was somewhere in this area. I remember missing it in here, and only then the price returned and I took the profit. Now if I wanted to take a volume based take profit, this is how I would have used the profile to determine the place, and it would be in here, alright, at this nicely visible volume cluster. So this would be the take profit. Also, as you can see, there was a rejection of higher prices in this area, pretty strong one, so this was a strong resistance. When the price went past it, it became a support. So that's another reason why it would be best to quit the trade in here, alright?